ना आपका फिर?
GST and import export. GST and its linking with import export.
ओके ओके, अभी हो गया क्या राहुल? अभी लाइव तो नहीं कर रहा है ना?
बस मैम 2 सेकंड हो रहा है प्रोसेस में। हो गया है, हो गया मैम।
Hello everyone, good evening. Today we have CA Shiva Goyal, an FCA with us, who is practicing chartered accountant from Rohtak. He is also faculty of MCA at Institute of Chartered Accountants and gives deliberation at various branches of NIRC. He has also deliberated more than 100 sessions on GST and customs at various respected forums like Tax Bar Association of different states and at various branches of ICAI. He has also co-authored a handbook on GST impact on real estate sector, which was published by ITRAA. Among so many achievements, he has received Young Entrepreneur Award 2022 from Indian Achievers Forum and recently awarded as Best GST and Custom Consultant of the Year by Start International MSME Forum. He has also received prestigious award titled as Rashtriya Gaurav Award presented by ex-Lok Sabha Speaker Mrs. Meera Kumari. Today, CA Shiva will share his knowledge and his experience on the topic of interlinking of GST provision with export and import. You are very warm welcome, sir, on platform of educating. Now, please, you may start your deliberation, sir.
Thank you so much, Pooja ji. At the outset, I would like to appreciate educating platform for organizing this kind of insightful webinars for knowledge sharing, even on Sundays, on weekends when everyone is out and enjoying their weekend. But still, it's Sunday is mostly free for the learning activity also. So it is good that anyone can spare 1 hour for the knowledge sharing. Generally, 2 hours, 3 hours webinars are there, so that are
Yeah,
much lengthy. But it's 1 hour program, and I think import and export is at the heart of everyone. Everyone wants to learn what are the import export provisions and how we should deal GST into import export provisions. So, without taking much time, I would like to right away start my deliberation, the presentation by using my PPT that is for 139 pages, I must say, but we cannot cover 139 pages in 1 hour. But I would give you the conceptual clarity for all the topics or the concepts that are basically used in the import and export provisions in GST, amended after all the amendments taking into place. So let me just share my screen, and then we start the interplay of GST with import export provisions. So uh, as you can see my screen, uh, the first concept I will take for the import export, in simple language, if I talk about import export, then I would right away come to this particular slide. When we import goods means we are bringing goods from another country to the India. So it is simple, in simple layman language. The definition as given in the section also is same as we are thinking. Like it says, import of goods means bringing goods into a India from a place outside India. And how come we will determine the place of supply of goods there in the import of goods? So that would be place of supply goods will be shall be the location of the importer, because the exporter in another country who is exporting goods into India, and we being the importer, for example, is taking goods in India from a place outside India. Then government is trying to levy GST under reverse charge mechanism per se, and he's charging GST on this particular transaction on import of goods. So how it is being charged? So you see, import of goods is liable to tax irrespective of whether imported for business purpose or without consideration. And please, uh, जो भी YouTube पे देख रहे हैं, whosoever are viewing on YouTube or maybe in the Zoom, आई डोंट नो Zoom पे कोई है या नहीं है, बट जो भी YouTube पे देख रहे हैं प्लीज कमेंट कीजिए कि जो जीएसटी आप इंपोर्ट के टाइम पर बिल ऑफ एंट्री जब फाइल करते हैं फॉर क्लियरेंस ऑफ द गुड्स, बिल ऑफ एंट्री फॉर होम कंजम्पशन, फॉर क्लियरेंस ऑफ द गुड्स जब चार्ज करते हैं तो बेसिक कस्टम ड्यूटी के साथ साथ आप आईजीएसटी भी पे करते हैं. सो बट देन आईजीएसटी जो हम चार्ज करते हैं, वेदर दैट इज बीइंग लेविड बाय द आईजीएसटी एक्ट or whether it is being levied by the Custom Tariff Act 1975. जो वो रिवर्स चार्ज है वो किस में है, whether it is in the GST Act or Custom Tariff Act. I don't know, Pooja, would I be able to see the answers or anything, comments like that in this particular session? I think
Yeah. Shiva, for that now you have to log in on the YouTube also,
YouTube also.
because
Welcome.
all the comments will be shared there only. And
Okay.
meanwhile, I can do one thing. Rahul, can you please copy paste the comments from the
Yes.
questions can be copy pasted from the
So
YouTube to
it
this
can be an
website.
interactive session. I would also be motivated by the answers being received by
Okay,
the
okay.
audience.
For that, so you need to log in on the YouTube on some other system,
On other
from some
system.
other
Okay.
devices. Yeah, you can do from here also, and you can look there. But you have to
Okay.
mute the YouTube channel for that,
I-
otherwise your voice will get echo.
Yes. So
Yeah.
let us leave that part and let me continue with the memento. So
Okay.
whenever we do import of goods, so the IGST is levied under the Custom Tariff Act 1975 on reverse charge basis. Many of us understand that particular RCM is being charged in the IGST Act, and tax is payable at the time of clearance of goods for home consumption. And you know what is the exact challan for the payment of the IGST along with basic custom duty? It is TR6 challan. जो CHA जब भी आपका गुड्स क्लियर करवाता है, so at that point of time through TR6 challan we pay the custom duty, and along with custom duty IGST is also levied therein. And therefore this happens, like GST is charged because government doesn't want that our Indian currency is gone outside into the foreign. Therefore the imports are somewhere restricted by the or demotivated by the government. Not restricted, you can import basically, but still government is trying to demotivate imports by levying certain basic custom duties, or maybe in certain cases anti-dumping duty, or levying IGST in the reverse. Although you can avail GST credit on the basis of that bill of entry for sure, and on the basis of the TR6 challan. And now option is also available on the GST portal. On your login you can track that import of goods ka GST credit, and you can also synchronize that through IceGate channel. So there is an option given in the GST portal also, wherein you import certain goods, so you can track that particular invoice wise GST that is available in your 2B in a separate section, or the Excel sheet, basic Excel tab, basically import of goods. So nowadays, or otherwise it is not coming into TV, no need to worry. We have valid document, bill of entry in tier 6 land. But having said that, conditions, there is a must condition that that particular IGST should be shown in the 2B. So it is always available. It comes automatically through IceGate, reflects in the portal, and you can claim the credit also like that. Now comes to import of service. So import of service is the basically there are three conditions that should be satisfied in the import of service. Number one, supplier of service is located outside India. For example, uh, there is a supplier or let's say CPA who is sitting in USA, and he is trying to give certain service to an entity in India, for example, Hyundai India. Yeah. So I'm taking a very basic example so that everyone can clearly understand the intent of the provisions in the GST, which are interlinked with the import and export. So supplier of the service is CPA, USA, who is sitting in USA outside India, recipient of services in Hyundai, who is located in India. And for the import of service to actually happen, there is a must, third condition is must, that is basically the place of supply of service is in India. So when you see when you study the place of supply provisions, so you please understand that wherever the goods are imported into India or services are imported into India, the place of supply of service shall be the location of recipient of service. And being recipient, the Hyundai India, which is located in India, so place of supply of service will be in India. And thus all the three conditions are satisfied, so that particular service will be treated as import of service. And taxes payable under IGST Act on reverse charge basis, of course, we are the importer of service, we need to pay the the reverse charge mechanism, IGST, in the RCM, in the IGST Act. Please mark my words, in import of service, in case of services, no one has to go on the ports or something like that, because it's intangible. So customs act do not apply to the import and export of services. It's a very conceptual thing that everyone should understand. And therefore the leviability of this particular transaction of the IGST in the import of service is on the reverse charge basis, is under the IGST Act 2017. Now, before coming into the high C sales, let me take up the export of goods first. I've just covered now the import of goods and import of service in very layman language. Now let me go by the export of goods and export of service. Then we will also study the different type of transactions, such as high sales transactions, deemed exports. What do you mean by merchant exporter, and what is the GST implications in each case of or nature of supply. So we will also understand that way, and slowly and gradually you will understand. But believe me, whether you know or you don't know about the imports and exports, these are the very basic terminology and the leviability I am talking about. And soon I am going to add certain questions and answers to it. And I will be just making it little difficult for all the viewers or the professionals who are viewing this on the YouTube. So export of goods and export of service. So you understand that export of goods means taking goods out of India to a place outside India. That means the goods must cross the custom frontier or the terrestrial territory of the India, and it should be taken out of India. And further export, as you know very well, that while doing export, shipping bill and EGM are the mandatory documents that are filed at the time of export, and shipping bill is very important document for the purpose of claiming refunds also in case of IGST with payment of the refunds. Place of supply is located outside India, because the very purpose of the government is to export the goods and not the taxes. So government doesn't want the taxes be levied on the exports, because government wants that more convertible foreign currency should come into India, so that the forex reserves get higher and higher and higher. So
मैं तो मम्मी की बात कर रही हूँ।
export of
बैठी रहो।
so basically for the export of goods, there must be a shipping bill must be filed, EGM must be filed, place of supply must be outside India, and there must be repatriation of the funds in the convertible foreign exchange. It should be there. In case of export of service, let us understand what is the export of service. So you can see here, export of service. The supplier of service is located in India. The recipient is outside India. and the place of supply should also be outside India. So there are like 5 conditions that should be satisfied to eligible for any service to be export of service. There are 5 conditions. Supplier, for example, if a chartered accountant in India is giving service to the and foreign entity in USA. So I being CA, supplier service is located in India. The foreign entity is of course in USA, is outside India. The place of supply of service in case of services is the you can see the location. It would be location of outside India. And the fourth condition is payment have been received by the supplier, me, in the convertible foreign exchange. And the fifth condition, supplier service and the recipient are not merely establishment of a distinct person. Means they should be not like that as a distinct person, merely establishment of a distinct person, but they should always be an independent kind of entities. So we will also understand this particular mark, what are the mere establishment of a distinct person. I will just take up to the further slides. If these 5 conditions are satisfied, then that particular service shall be declared or qualified as the export of service. In export of service case, BRC, bank realization certificate, and the FIRC details are very mandatory for claiming refund. For export of service, you can just go into, you can claim the IGST refund also. I will talk about the refund part also, how the refund is available in both cases, in export of goods, export of service, with payment, without payment. So I will deal with all 4 cases, but I'm just telling you that for export of service, like what is the basically mandatory things to be qualified as export of service. Place of supply, I already told you, shall be the location of recipient of service, that would be outside India. And repatriation of the convertible foreign exchanges, much mandatory there. Now, just I would take a few examples, and then I would come to the certain specific parts. So you see here, एक्सपोर्ट ऑफ गुड्स को गवर्नमेंट ने जीरो रेटेड सप्लाईज का टैग दिया हुआ है, दैट जीरो रेटेड सप्लाई विल बी द सप्लाई व्हेन you are exporting the goods and services, and you will not be levied any taxes, any GST thereon. So let us take an example, very easy example, and then we will study more about the import and export. So let us take an example. See, this Mr. A is sitting in Canada and Mr. B in Kerala. And Mr. B has received an order from Mr. A for supplying goods directly to Mr. C, who is sitting in Punjab. So I repeat, please understand this case studies very seriously, so that you can understand the concepts in a better way. Mr. A is sitting in Canada, Mr. B is in Kerala, and Mr. C is in Punjab. So Mr. B receives an order from Mr. A to supply of goods to Mr. C. So now please understand that who would be billing to whom? Mr. B would be raising a commercial invoice to Mr. A. Why? Because Mr. B has received an order from Mr. A in Canada. So, but whether goods are being taken from India to a place outside India, is this particular case study. My first question is whether this particular transaction would be treated as export of goods. अब याद कीजिए, what were the conditions for the to be eligible in the category of export of goods, that for a particular transaction to be qualified as export of goods, the goods must be from a place in India to a place outside India. Now, in this particular case, Mr. B is not supplying goods to Mr. A. Mr. A has given directions, who is sitting in Canada. Mr. A has given already directions to Mr. B to supply goods to directly to Mr. C, who is sitting in Punjab in India. So whether this particular transaction would be regarded as the export of goods, let me see the answers. please give me the YouTube link also so that I can you please, educating team, can you please give me the YouTube link on my WhatsApp so that I can just open it on the phone so that I can see that what are the replies. Yeah. So till the time I get the YouTube link from on WhatsApp. So this particular transaction cannot be qualified as exports, not at all, because the goods is not moving outside the territory of India, and therefore it cannot be termed as exports. Now my second question is whether Mr. C, who is to whom goods are being delivered in Punjab, whether he would be entitled to take ITC. Mr. B is raising invoice to Mr. A, and of course, Mr. A would be raising invoice to Mr. C. So, would this transaction be treated as an import of transaction? Is this transaction would be treated as if Mr. C is importing certain goods from Mr. A? For import of goods, we have already studied now that goods must come to India from a place outside India. In this particular transaction, as goods do not come from a place outside India, therefore no import for C. C will get invoice from Mr. A, and C will not be eligible for credit as tax paying documents is in the favor of Mr. A in USA. And therefore, now it is very imperative. For import of goods, we have already studied now that goods must come to India from a place outside India. In this particular transaction, so as you can see that in this particular case study, Mr. C will not be eligible for ITs as well. Let us move to another case study. Another case study. Mr. A is sitting in Canada and Mr. B is sitting in Kerala, and Mr. A gave order to B for the supply of goods, but Mr. A has given an order that you please retain those goods and you don't deliver to me in Canada. Order required for the development of new tools to be retained by India. It may be the case that in certain cases, there are like the exporter can say that you have to install a machine outright there, so you keep that tool there and use the tools for any purpose. Mr. A in Canada can give certain directions to Mr. B to retain the goods and not deliver the goods. So whether this supply of goods qualify as exports, the answer is since the goods do not move outside the tertiary or the territory of India, therefore it cannot be termed as exports. So I think through these two case studies, it is very much clear to each and every one of you that how the particular transaction is treated as whether import or export of goods. So let us move further to certain more concepts and the more provisions into play. Yeah. So you see here, what I'm trying to figure out is, let me just go back to the export import provisions. Let me just take few examples also. Now when we do export of goods, so there are two options available through which you can claim refund. As you all know, export of goods can be done with two particular parts. Number one, you can export the goods on LUT basis, where there would be no IGST level. Of course, you can export the goods without charging any IGST. So that is known as without payment of tax, where you apply LUT on the online GST portal and you furnish that LUT to the to the custom authorities. LUT number you give, and then the goods are allowed to be exported to a place outside India, of course, without payment of any taxes. In that particular case, you can claim input tax credit refund from the GST portal in the tab export of goods without payment of taxes. So, in that particular case, the ITC of input and input services can be taken as a refund but input tax credit of capital goods is not allowed as a refund. And moreover, there are certain other rules regarding GST refund. There is a separate chapter also regarding refunds. The export of goods, you cannot take more. There is a calculation formula for the refund, like export turnover divided by adjusted total turnover into the net ITC, and ITC would be restricted to the input and input services. In the export turnover, it says that the value should not exceed 1.5 times of the domestic price. So various amendments have come throughout these 6 years, and calculations have to be made in while doing the refunds. But categorically, conceptually, you need to understand that capital goods का refund आपको नहीं मिलेगा. Without payment of tax आप refund claim कर सकते हो, and ITC of input and input services would be available. But in case of with payment of tax, where you do not export the goods on the basis of LUT, but you export the goods after payment. For instance, you export the goods and there is 18% GST leviable on the export, then you will file the shipping bill, you will pay the IGST, and it is an automatic route of payment. You don't have to apply to the GST authority or custom authority. Once the shipping bill is filed, and you file the returns, GST return, you punch the data of the export shipping bill number, port code, and everything in the GSTR 1 also, and you also pay in the 3B also. Then perhaps you see that as per rule 96, the shipping bill filed by an exporter of goods shall be deemed to be an application for the refund of IGST of the goods IGST paid on the goods exported out of India, and no separate application required. And within 10 to 15 days, I think refund automatically gets credited into the bank account. But there are the cases where the refund is not getting credited into bank account. There may be various reasons for that. Mukhya रूप से there are 6 errors that can be checked on the IceGate portal. I will show you what are the errors. जब आप with payment of the tax IGST का पे करते हो और refund नहीं आता, so there are certain errors that particularly come in this particular case. So you see here, I think in this particular case, let me just wait. Let me just take it to the oh God. Let me just make it in the full mode. So we can see on the screen this particular part that there are SB 0001, 002, and so on so forth, certain error codes which eventually come when you apply the when refund does not come even after paying the IGST on export. I think have I put that into slide? Let me just check, or I've missed to provide that in my slides. Just let me check that. So SB 0001, 0002, SB 003, 4, 5, 6. There are certain like 6 kind of codes that are given. You need to check why the refund is not coming. Maybe the details are not properly filed. Maybe it is not there. But I would give you the brief of that. Maybe you have declared, you have put wrong shipping bill number, for instance, in the GSTR 1. So refund won't come because the validation would not happen. For example, you have any, PFMS error, bank validation errors are there, then refund won't come. The details in the EGM does not match with the GST detail, then refunds won't come. Sometimes the GST invoice number, you put it in the GST 1 and you put it in the shipping bill, does not match, so there will not be any validation, and there would be a validation error and the refund won't come. So various cases are there at various ports, Kolkata port, Nhava Sheva port, and Chennai port, Mundra port, at New Delhi custom port. Lot of cases are happening where the refunds are not coming. So in case anyone is feeling any specific issues, whosoever is viewing at the YouTube, please feel free to contact me. I would rather help you to get that particular refund credited to your bank account. I see the list also. Thousands and thousands of exporters are not getting their legitimate with payment of refund, which should otherwise be available automatically due to certain mismatch of details. And this particular refund is given by the customs. Nowhere GST authorities are involved in this. So do not approach GST jurisdictional officers to for the refund to happen. It is basically to the open to the custom authorities, and that particular thing should be taken care of, that it would be sorted out by the custom officers or on the ICE gate portal. So we have covered that particular part with payment of tax. Now as you all know that this particular thing, just let me yeah. So just let me go ahead with the slide with certain more examples. Uh, Now my next question is whether refund we should avail, we should go for the export with payment or without payment. How should we decide? So please listen to that. In case you go for with payment of refund, you pay the refund and you use the total ITC. Like in 3B also, you pay the output liability of the exports by using the ITC, and that is the common ITC, including input ITC of input services, capital goods. In case your company has lot of input accumulating due to capital goods, then you must go with export of goods with payment of duty, because in that particular case the whole amount, for instance, you have 80 rupees ITC accumulating, 60 input services and 20 capital goods, so 80 accumulated ITC. And for instance you export the goods 100 rupees and you pay 18 rupees GST on that. So 18 rupees would be paid out of 80 rupees, and full 18 rupees, 18 rupees, 18 rupees would be refunded by the custom authorities to your bank account. But in the first case, where there is an export without payment of tax, what would happen? You won't get a refund of 18 rupees, but you would get refund of out of 60 rupees, not 80 but 60, because 20 pertains to the capital goods. So in that particular way, if you have various accumulated ITC of the capital goods, then perhaps you should go for an approach with the the with payment of tax rather than without payment of tax. But in certain cases where there are no much capital goods accumulation, and in certain cases there are exempted goods. So in case of exempted goods, you cannot levy 18% IGST with payment, because IGST is otherwise also not levied on the goods. So with payment option is not available for that particular commodity is exempted goods. So in that particular case, you have to use the without payment of tax wala portion. So this is how, like, you can choose like how to go for export with payment or without payment. Further, in case of services, let me just tell you export of whether you do with payment export of service or you choose for without payment of export of service. In both the cases, there is no ICE gate or the custom authorities involved. So perhaps both the refunds have to be taken from the GST portal only. And when you go for the refund application, there are two particular options given in the GST refund portion. Number one is the export of services with payment of duty, with payment of GST, and export of services without payment of GST. So you can apply manually, refund manually, and you have to fulfill the restrictions of the Master Circular 125 by 2019. And for any assistance in the GST refunds or any problem in the import export, you can directly contact to me. I would be more than happy to help you. So let me just go ahead with certain this is the formula given at the screen. Maximum refund amount would be net ITC into turnover zero rated supply divided by adjusted total turnover. And that adjusted total turnover, please appreciate and understand that it would not include exempt turnover. Sometimes we just take the turnover from the profit and loss account or balance sheet financials, audited financial. But please make sure that that adjusted total turnover should not include exempt turnover. And moreover, turnover of zero rated supply that should not exceed 1.5 times of the domestically supplied goods. So it should be less, whichever is less. So please, authorities are now thoroughly checking the refund applications, not acknowledging it until unless you give them the proper document, proper, complete annexures that are mentioned in the master circular. You are not giving the, refund calculations part, annexure B, wherein you have specified the ITC also, then shipping bills, packing list, commercial invoice, all those details have to be given to the GST authority for your GST refund application to be thoroughly reviewed and scrutinized, and only then acknowledgement happens. And then further, if any show cause notice or happens, then for certain partial rejection of the refund, you may receive the show cause notice. And once you reply to the show cause notice, if assessing officer feels that whole refund should be allowed, then it issues RFD 05 and 06 sanction order and the payment order issue. And in case there is a partial rejection of the refund, then you get the partial refund into your bank account, and the partial refund ITC gets back to your ITC credit ledger through, I think, PMT 03. And this is how the whole process of GST refund in case of export happens. And this from the date of application, the whole process till sanction or rejection should must happen within 60 days from the date of ARN generation. But in case DM is issued, deficiency memo is issued in the very starting, then you need to apply it fresh with all the documents including. So in various cases, we see that professionals not doing proper calculation. They are including exempt turnover, denominator, numerator, proper figures should be put. Otherwise, the refund amount might get inflated or deflated depending upon the figures. But as per my view point, it should be properly calculated and proper documentation must be done. So we may have a dedicated session for the GST refund, then we will talk about this. Specifically, this is the specimen of the shipping bill, and this is the specimen of the invoice. All the terms should be very much clear. While calculating the turnover of turnover of zero rated supply, you must take the FOB value, free on board. You must not include the insurance and the freight amount in that particular month. In various cases, we have seen that the consultant, the professionals are not understanding the basic terms of FOB and CAF or CNF. All are the INCO terms, basically international terms that are used. But for GST refund calculation, the FOB part would be taken into consideration. Perhaps the utility that has been given on the online portal, also specifically it is given that FOB value has to be taken for the export or the zero rated supply. And there is a specimen value wherein shipping bill may be आपका FOB value mention होता है. FOB value is mentioned, invoice value is mentioned. So all things are mentioned. So I have also kept the specimen before you so that you can see. And I have also given certain, I have also given certain cases where there is a comparison between how it should happen. Then we will move to the export procedures. What are the documents required for the exports? Proforma invoice, packing, custom packing list, certificate of origin, shipping bill, bill of lading. All these, you must have a thorough understanding of all these documents also in case authority asks that. But you should know that how all these things are dealt with. Although this is a procedural part, but certainly we must understand that. Then we go with the I think now I have well covered import of goods, import of service, export of goods, export of service in the GST refund portion. Now let me just move back to the my another concept, very important concept, that is merchant or high C sales. I would first cover high C sales. Let me, yeah. So yes, let us start with the another concept, high C sales. So what do you mean by high C sales? You know, section 5.2 of the act says that a sale or purchase shall be deemed to take place in the course of import only if sale or purchase either occasions such import or is affected by the transfer of documents of title to the goods before the goods have crossed the custom frontier of India. You know, what do you mean by high C sales? You know, in particularly, if I can see in case of high C sales, the for example, you are importing certain goods, and before the goods are entered into the custom territory of India, those goods are just exported to another place before they enter into the custom frontier of India. For example, Mr. A, who is sitting in USA, I am the importer of the goods. My goods are coming from Mr. A, and who is sitting in USA, and I am importing the goods. But before they enter into the custom frontiers of India, I outrightly sold these goods to the another party who is sitting in, let's say, UK, London. So the goods have not come into the custom frontier of India, and goods would move directly to the, for example, UK. So in high C sales, supply of goods imported, not imported exactly into the India, but basically they do not cross the custom frontiers of the India. So this is known as high C sales, and to be very precise, this whether GST would be leviable into that, what would be the GST leviability, whether IGST would be levied on the high C sales. So let me make you very clear that it is IGST is only leviable when you import the goods, when goods enter into the custom territory or the custom frontiers of India. Since the goods have not crossed the custom territory, it outrightly bypass the custom territory and gone to another country, and therefore IGST is not levied in this particular transaction, high C sales. And moreover, I must tell you, in Schedule 3 also, in Schedule 3, there is a specific clause given. Let me just show you that clause so that you can you can understand that in Schedule 3 there is a specific clause where it is in clause 7 it is given that, you see clause 7 on the screen, supply of goods from a place in non-taxable territory to another place in non-taxable territory without such goods entering into the India. So this particular transaction is given in the Schedule 3 clause 7. And similarly, two more transactions are given in Schedule 3 on which there will be no GST levied. This is the schedule which is neither treated as goods nor treated as services. So high C sales, where the supply of goods from a place in non-taxable territory to another place in non-taxable territory without such goods bringing into India. Now there are two more clauses given. Number 8A, supply of warehouse goods to any person before clearance for the home consumption. Sometimes what happens, the goods are imported, but these are put in the custom bonded warehouse, and these are not cleared, or the bill of entry is not filed for the home consumption, because these goods are meant for export as such. So in that particular cases also, because the goods are not meant for consumption or the destination in India, and put in the custom bonded warehouse, which is the designated area given in the customs on which no taxes are levied, and if the goods move out of those bonded warehouse in terms of exports, so that transaction is also given in the Schedule 3, Clause 8A. And further, 8B talks about supply of goods by consignee to any other person by endorsement of the document of title of goods after the goods have been dispatched from the port of original place located outside India, but before clearance for the home consumption. So it is a kind of high sea sales, but in this particular case, the documents are endorsed to some other person. The endorsement is done by the consignee to certain another person. So before the goods are cleared for home consumption, the goods are party to the another port located outside India. So in this transaction also there would be no IGST levied, and this transaction will be non-GST levied transaction, Schedule 3 transactions. So let me just come back to my screen and let us go ahead with the our flow. So let me just share the screen. Yeah. So now particularly, the sale of warehouse goods. So we have studied this. Okay, one question has to be whether the credit will have to be reversed for the proportion of the common input or input services attributable to the high C sales. In case of 7 and 8B, the ITC does not have to be reversed as such. But now in the budget 2023, it was notified that in case of 8A warehouse goods, the proportionate credit will be reversed, per se. Then sale of warehouse goods we have already covered in the Schedule 3. We have covered export of goods services, and then we will cover certain more particular part. Let us move to the merchant exporter, which is another very untouched area, or the area where the conceptual clarity is required. So what do you mean by merchant exporter? So merchant exporter means that as per the foreign trade policy, merchant exporter means a person who is engaged in the trading activity and exporting or intending to export goods. As such, that particular person is procuring goods from India domestically and is exporting to a certain person sitting in foreign. As such, there is no value addition in that. Like in previous cases, there is a manufacturing or value addition, but in merchant exporter concept, there is no value addition as such. Goods are taken from a supplier in India, and then goods are moved out to a place outside India and exported as such. So in this particular category, it is given as the merchant exporter category. So number one, for example, Mr. A is in India, who is giving, for example, I am the merchant exporter, Mr. M, and Mr. A is giving goods to me, so selling goods to me, supplying goods to me, being the merchant exporter, and I will further export the goods. So for me, there is a concessional rate of tax, 0.1% is given. Mr. A in India will charge 0.1% tax for the goods that will be supplied to the merchant exporter by notification 4140 by 2017, and I will further be exporting that. The reason behind the concessional rate is because if I am availing the goods on like 18% or at a applicable rate, then because I have to only export, so GST won't be levied. So there would be huge accumulation of the ITC. So the government has given the concessional tax rate benefit of 0.1% for the procurement of goods for the exports, and exporter registered may procure goods from the registered supplier 0.1%, and there are certain conditions that goods should be exported within 90 days from the date of tax invoice generated by the registered supplier to the registered exporter. And registered exporter shall also indicate the GST IN of registered supplier in the shipping bill or bill of export that I have procured goods from the so and so person. Registered exporter, that is the merchant exporter, should also be registered with the Merchant Export Promotion Council, which is the specific council. It could be Textile Council, it could be SPEC, it could be, there are various councils, for the export promotion. So when we export, then we must be registered with the certain particular relevant specific industry council. So a lot of councils are given, and you can be registered with any of the council in whatsoever the case. So these are the basically conditions given for the merchant exporter. Only then the benefit of the 0.1% will be given. Only then the all other benefits given in the merchant exporter shall be bestowed upon the merchant exporter. Upon export of goods, the registered exporter shall provide copy of shipping bill or bill of export containing the GST and tax invoice of the registered supplier with the proof EGM export report having been filed to the registered supplier as well as jurisdictional tax officer of such supplier. So it is basically to prove that otherwise the domestic supplier Mr. A would have charged 18% to me. Then how come GST authorities would ensure whether this particular goods have been exported or not? So shipping bill or the EGM is the conclusive kind of documents once furnished. So that will be taken as a conclusive evidence that these goods have been exported and shipping bill has been filed. So the concessional rate benefit will be given in such a way. Now there is another concept of deemed exports, and in the deemed exports category there are like 4 transactions that are notified till now, and it's very deemed export is a kind of concept which is not exactly the exports because goods are not moving outside India from India to a place outside India, but government has said that if these transactions are happening, then we will assume that we will deem that this is a deemed export. This is as good as export, and all the benefits of the export will be given. All the benefit or maybe partial benefit will be given to the deemed export category as well. So number 1, section 147 empowers central government to notify supplier of goods as deemed exports even if the goods do not leave India, and payment may be received in India or convertible foreign exchange. This transaction has also been relaxed. Key foreign currency may or may not be received, but that particular transaction will be deemed as a deemed export. Number 1, not goods supplied to EU are considered as deemed exports. So Rule 89 of the CGST rules has been amended by notification 47 to allow either the recipient or the supplier to claim refund of the tax paid. So, for example, Mr. A, who is sitting in India, has supplied goods to Mr. M, me, who is sitting in the EU unit, EU export-oriented unit. So that particular transaction would be, treated as the deemed export, and only one person can claim the refund, either the supplier or the receiver of the goods. And on the portal, you can see that both options are given. But if, let's say, receiver is taking input tax credit refund, then it has to file a declaration from supplier that it shall not avail the GST refund. It is available to either of the person, one of the person. It is not available to both the persons. So due care has to be taken while filing the refund, that while if receiver is filing the refund, then it must be made sure that it may be the case in supplier has already taken a refund. But there are certain other documents also which you need to give that are mentioned in Circular 125. Second number transaction which is notified as a deemed export is Circular number 14 that has been, that prescribes the procedure to avail exemption on procurement of goods by EOU, STP, ESTP, BTP units from DTA suppliers. So this particular transaction has also been notified as the deemed exports. Then one transaction is also of the EPCG goods, and another one is of advance authorization. In case of EPCG, export promotion capital goods, maybe you are importing a capital goods out of India, then you can use that EPCG license and your duty is not levied. Or in certain cases, you even get domestic license from the EPCG. You obtain the EPCG license, you file it with the DGFT application for EPCG, you get the treated as you are as such supplying to the EPCG deemed export category, because then there is an obligation that it will be exported in the next, let's say maybe 1 year, 2 year, and 6 times value of the duty saved has to be exported as per the foreign trade policy rules. So all these things have to be justified and followed as per the custom rules. And against advance authorization also deemed export categories taking place. So I think I've covered this. I'm skipping some of the slides because of the time constraint, but I think we have taken up the main part. I have told the document required for the exports. Then I've taken up the certain 2 case studies. LUT I have mentioned. Let me just see if any other important concept is remaining or not. Just let me see. Deemed exports, I have summarized here. See, supply of goods by a registered person against advance authorization, supply of capital goods by a registered person against EPCG authorization, supply of goods by a registered person to a EOU. So in all these cases, these are the extracts of the notification 48/2017, and refund of deemed export can be claimed either by the recipient or by the supplier. So the procedure has been given, and undertaking shall be furnished procedure as laid down in the supplier. In any case, you need any assistance in filing of the refund, but are the specific documents to be attached in the deemed export category. So that I generally tell all these things into the refund session. And if the supplier is availing credit, then recipient will should not avail input tax credit, and furnishes an undertaking to the effect that supplier may claim the refund and I will not claim the input tax credit. So this is how it happens. Benefit of EPCG and other similar schemes का ये मैंने एक चार्ट दिया where you cannot have multiple benefits. Notification 48 में जो डीम्ड एक्सपोर्ट कैटेगरी है उसमें आप एक्सपोर्ट विदाउट पेमेंट की कैटेगरी में रिफंड ऑफ आईटीसी इज अवेलेबल, but it is not available with payment of taxes. Then concessional rate in case of merchant exports, concessional rate benefit is given, then you do export without payment and refund of ITC would be available. Then EOU and EPCG category also, you can do the exports with payment and you can claim the refund of ITC. In case of export with payment, the IGST paid is not available as refund except in certain cases. So let me summarize that on exports what can be claimed as refund. If you have paid the taxes, then export of goods with payment of tax, export of service with payment of tax, SEZ supplies with payment of tax, tax paid on deemed export to supplier or the wrong payment of taxes. In all the cases, but at the actual amount that has been paid as tax, you can claim refund. In case of input tax credit, you can see export of goods without payment of tax, SCZ supplies without payment of tax. You can claim the ITC refund, but that would be restricted to the input and input services. As you know, in case of inverted duty structure, ITC is restricted to the inputs only, as stated by the Supreme Honorable Apex Court or Supreme Court in case of VKC foodstuffs. And in all other cases, tax paid on deemed exports to the recipient, whatever actually has been paid by the supplier and has been reflected in the invoice in the GSTR 1 3B, the actual amount paid would be can be claimed as the GST refund. So I think this is like clear to all. There was a certain amendment थी zero rated supply में कि supply of goods or both for authorized operations. Earlier it was not given, but then after amendment it was added as a for authorized operation. And there are certain authorized operations given where this particular authorized operation is treated as a zero rated supplies. And another amendment is the government may restrict with payment of goods for a specific category of persons. The government may, on the recommendation of the council, may specify the class of persons who may take zero rated supply on payment of tax and claim of refund tax of tax so paid. So अभी तक notify कुछ होगा आगे जाके तो हमें पता लगेगा. Otherwise, proviso says that refund is will be available to a specific class of person in case of with payment of duty. So I think we have well covered that. And I think time is also approaching. It's already 5:10. So I have well covered all the things, concepts. Basically, a lot of things are there. Place of supply, intermediary services, then SCZ to DTA, DTA to SCZ. All those issues are still remaining. But due to the time constraints, I cannot well cover everything, but I have tried to cover well the concepts and the basics of the interplay of GST provisions with important export. So I think that you can note down my number also in case you need any assistance per se. You can note down my number also. I can share it on the whiteboard, and the number is, so just let me draw. Maybe I'm not able to use it. So I can tell you the it is 89504 25259. 89504 25259. And I think I have well covered the interplay of the GST provisions vis-a-vis the import-export provisions. In import-export, there are various other things are available, but I think in a span of, such short time, it is not possible to cover all the provisions, but technically and, in a span of 1 hour, I think I have well tried to cover the example also, the kind of concept that are generally available in the, export or the import category. So I've tried to taken up those concepts and try to make out a kind of hook. A lot of intermediary provisions, place of supply, a lot of other provisions are there. Even deemed exports or maybe DTA to SCZ requires in itself one session for 100% to cover. But still that I think I was able to take up the whole concept in a very brief manner, keeping in view the time constraint. And I really thank Educating for inviting me as a guest speaker and sharing my experience and insights. practical. I also deal practically into indirect taxes and have dealt various cases of the GST refunds or maybe export schemes, incentives, and various other matters in the indirect taxes. So I am well available for all of your services. Also, I again repeat my number 8950425259, and my email ID is simple cshivagoyal@gmail.com. GOYL cshivagoyal GOYL cshivagoyal@gmail.com. So I thank Educating Platform, Pooja ji, Arun ji, and organizers for having me here and share my insights on today's webinar and keeping in positive the time. I think I was well able to justify the Sunday evening, whosoever has viewed it on the YouTube or maybe later on viewing it on the YouTube. So once again, thank you so much. Thank you for your patient hearing. This is now I'm taking just a signing off from my side. Thank you so much. Over
Thank
to
you, Shivaji. Thank you so much for deliberating such a nice session. And though the topic of export and import is very big, we all well aware of that, but you have picked the very right point out of it, the refund process, which is the charm of export and import in GST. And you take us through the practical approach by what are the mistakes that we do in making refund application and how can we avoid it, and what are the reasons for the denying of or rejection of the refund application. So it's a very fruitful session, very I could say short and useful, and we would like you to have you on our platform later also, in future also.
My pleasure.
Thank you so much. Thank you so much.
My pleasure. Thank you.
So we are ending our session here. Goodbye, everyone.